Hey now, bulls and bears. Welcome, welcome, welcome. We are back with another dose of economic reality. My name is JJ. You're watching Bull, Boom, Bear, Bust. We have a lot to talk about. As we all know, there's a lot going on right now in the financial world, and this affects all of us. Will your bank be the next to fail? A lot of people are still not very confident, even though we've seen so-called rescue programs implemented. Now, there's a lot of misunderstandings happening right now. A lot of people are still debating if this is a bailout or not. I say it's a bailout. No, it's not a direct bailout of the bank, but it's a bailout of the depositors of the bank, right? So what's the difference if the money, the bailout money gets sent to the bank, and then the bank therefore gives the money to their depositors instead of having the depositors lose their money? So just because you are skipping the middleman and going right to the depositor, right? That shouldn't take it out of the bailout category. You know what I mean? So there's a lot of people out there that are thinking just because Janet Yellen's out there saying it's not a bailout, because the Fed's out there saying it's not a bailout, that it's not a bailout. Listen to yourself. Do you believe these people, after all this time, they told us that inflation was transitory. They told us the economy was strong. They told us the banking system was stable. The stress tests, all that, they said everything was fine. So you're still believing these people. Just because they say there's not a bailout, you're still going to believe them. Well, it depends on what you call the bailout. So we have depositors being rescued. Normally, FDIC is only supposed to help the little guy, people with less than 250,000. Now that's all been thrown out the window. Just over the weekend, everything's changed, and now we're going above 250,000. We're having the Fed basically give money, whatever you want to call it. I call it a bailout. Give money to millionaires, multimillionaires, and billionaires. Billionaires with a B. People like Mark Cuban, giving it to corporations like Roku, who had a lot of money tied up in that SVB bank. All right, folks. So this is unprecedented as far as how fast they changed the rules. They changed the FDIC guidelines just like that, just overnight, just one emergency meeting, and now everything has changed, right? So let's get into some other news. A lot of other banks are going to fail. I'm not saying they're going to fail this week or next week, but a lot of other banks are going to fail, and we have some banks to be on the lookout for. Maybe to, I'm not urging anyone to take their money out of the bank. I don't want to start a bank run. Maybe your bank will be just fine. Maybe it won't. Do your due diligence. But here's just a few that are undercapitalized here that I want to talk about. Now, this list was put out by FactSet, and it was published by Morningstar and a few other publications. But here is the list, and I'm not saying that these banks are going to go down, but these are banks that are also suffering similar to what SVB had suffered with big securities losses, meaning they're undercapitalized. We have Customers Bancorp Incorporated, Sandy Spring Bancorp, New York Community Bancorp, First Foundation, Ally Financial, there's a big one, Ally, Dime Community Bank Shares, Pacific Premier Bancorp, Prosperity Bank Share, Columbia Financial, right? And I'm not saying that there's definitely going to be a run on the bank. A run on the bank can happen to any bank, even the ones not on this list, and it can make a bank fail. If too many people try to get their money out at once, that could make the bank fail. Even your too big to fail banks. Well, how's a too big to fail bank going to fail? They'll have to get rescued, okay? So a lot of people are moving their money into the too big to fail banks because they feel like that they're going to be rescued no matter what. Seeing what happened in 2008. And also, just because a bank is undercapitalized doesn't mean there's going to be a bank run. If enough depositors, or if you don't have a surge in depositors going to get their money out, even an undercapitalized bank may still be able to survive. Now, ultimately, they may still fall to the fact that they're undercapitalized, and things like loan losses, people not paying back their loans. A lot of different things, different angles, but the bank run is the most obvious one when everybody goes to take their money out at the same time. All right, so I think we need to be really, really careful. I've urged here for years for people to keep something out of the system, and have something tangible that's yours, that you could trade, that you could use to barter with, or stay alive with, while your bank is has gone dark. Because that could happen. Your bank could go dark. So we're seeing the Fed jump in here with the FDIC, with the Treasury coming in to give these depositors their money back. Will that be the same plan that gets implemented for all the other banks that are going to fail? Maybe. So maybe there's no risk of losing money. So if you believe that's going to be the case, if you believe that this what happened with these couple banks here is going to happen with all future bank failures, then leave your money in the bank. You're safe if that's what you believe. I don't believe that. I believe there's going to be ultimately a big enough collapse in banks where we're going to see bail-ins, where they're going to say, sorry, we don't have enough. We can't handle this anymore. People are going to start losing their money. So after bailing out all the billionaires from this SVB bank, now even people that needed to be bailed out with less than $250,000, I don't think those people are going to be rescued either once the failures start stacking up. See what I mean? Because FDIC, remember, they have less than 2% of the funds available to cover all of the deposits, right? Less than 2%. So you want to talk about undercapitalized banks, the FDIC is undercapitalized, right? The only thing they can do is create more money. That's going to be the Fed, and add it to the debt. That's the only way for this to be funded if we see more bank failures. Also, some of the rating agencies that are supposed to be out front warning us of these things, of these banks that are undercapitalized, are finally facing economic reality. We have Moody'S out there. Moody'S cuts outlook for the entire U.S. banking system to negative, to negative, citing rapidly deteriorating operating environment. Moody'S, finally. We've been telling you that the banks were undercapitalized here for years, right? The banks don't have to have enough money in deposits to cover the loan, so how can they be capitalized, right? It's all a Ponzi scheme. These banks are designed and destined to fail. So now Moody'S is finally coming out. So do you want to believe the people that were wrong? Even Moody'S, they should have been out years ago warning everybody of the risks in the banks, but they weren't. Yellen should have been out there. She was talking about the debt ceiling, and she's still talking about that because that's another thing that's going to bring this house of cards down if that doesn't get passed. I think it will be passed, but we're not out of the woods. There's going to be more bank failures coming. The ones I named, maybe, maybe not. If enough people go get their money at once, maybe. But that's the thing. How many people are actually thinking, or how many people actually know that things are wrong, right? Maybe they're just watching CNBC or some other business network, and they think everything's fine, it's under control. What they just did, stopped the crisis from happening, which it really hasn't stopped it. It just bailed out, helped out a few depositors. Now, just to show you how confidence has been re-implemented in many people, a lot of these regional bank stocks that sold off very heavily yesterday on Monday, a lot of them have rebounded, not completely, but some pretty significant rebounds, 5, 10, 15. I even saw a 20% rebound in one. So will this hurt a lot of people? Is this a bounce? Is this a dead cat bounce for these stocks? I think it's very likely because the pain is not over. In fact, it's just getting started. This is just the first few dominoes and many other dominoes to fall, in my opinion. Also, a lot of people / investors, traders are looking for safety. We see Bitcoin surged up almost back up to 26,000. Will that last? I think cryptos are going to be under a lot of fire here too, but this may be, maybe a safe spot that people perceive as a safe spot. Gold down today, slightly down to 1,911. Silver up just a hair to $22. Folks, silver and gold is being suppressed, especially silver, while central banks accumulate precious metals. They're keeping the price tamped down on the paper market using derivatives, and therefore they can accumulate the physical asset at a lower price. By tamping down the paper price, you're also suppressing the physical price, and they're accumulating the physical. Do you understand what's going on here? So at some point, they're going to stop shorting these metals, and they're going to let the price go back to their real value, and they're going to be holding a lot of it. You see what's happening here? So you need to be in this. You need to be in silver. I've got a link down below. You need to be protecting yourself, in my opinion, with silver. That's going to be the real rescue program is going back to a real money system. But until we get there, there's going to be a lot more pain to go through. The rest of the year 2023, we're going to see a lot more surprises jumping out of the shadows, kind of like what we saw this weekend, but even bigger and worse. We're going to see inflation, shortages get worse. So it's going to be wild times, folks. So we're going to wrap this one up. Hope everybody's good. Keep stacking. Keep your head on a swivel. Be smart. Big love. Bye for now and peace.